Hello traders, you're welcome to this video. In this particular video, we are going to be discussing the M pattern. Here we are going to be looking at the M pattern trading strategy. Okay, so as the name implies, the M pattern simply means the formation of an M pattern, a literal M pattern on the chart, as we can see here, right? The literal formation of an M pattern on the chart. Now, the M pattern is a potential reversal pattern, right? When the M pattern forms, it shows that a bearish trend is about to start or a bullish trend is about to end, right? Most of the times, the M pattern forms at the end of a bullish move and before the start of a bearish move. So as we can see here, we had a bullish move just right before the M pattern formed, okay? And then the M pattern, it may not necessarily be at the same level that the 2 points of the M, the two swings. Yeah, the two swings might not necessarily be at the same level. One can be lower than the other. But the main thing is that you will see the first leg is longer than the middle leg and this other middle leg, and then the other leg is longer, right? So the M pattern formed right about here. So whenever you see the M pattern form, you might want to be looking out for a breakout, right? How do you trade the M pattern? When you see the M pattern form on your chart, what you should be looking out for is a breakout. Just remember that the M pattern indicates the end of a bullish move and the start of a bearish move, or the potential start of a bearish move, right? So when you see an M pattern, you should be looking for sell opportunity, okay? Sell opportunity should be what you should be looking for. Now, before you grab that sell opportunity, make sure you set a support line, right? At around the um the level where the middle of the M stopped, right? Set a line there, that should be your neckline. And then once you have a breakout from that line, you can decide to wait for a reversal, a retest, sorry, not reversal, just for extra confirmation. For example, remember we've discussed breakouts in previous videos. Anytime a breakout happens, there is a high chance of a retest. That retest may not exactly reach the point of breakout, but there's a likelihood that you will see the opposite candle form. Just like how we had the breakout was a bearish breakout and we had a bull candle form. The retest did not exactly reach here, but like right after this, the sell continued. So you might have considered entering your sell here just after this pullback to confirm the breakout, or you might even just enter some pips after the breakout. But the reason why it is good to wait for a retest is that sometimes a false breakout can occur. If it was a false breakout and you just entered immediately, the price will start going against you, going back up against you. But if you had waited for a retest and then you entered, then you are good to go. So after the retest or after the bull candle formed, because this is a bearish breakout, would have entered a sell right about after this sell candle, and then our stop loss should be above the resistance, above it, right? Some pips above it, because if this breakout is valid, price should not come back to this place, okay? So your stop loss should be above that resistance, some pips above it. Then your take profit can be at the next key support level. So we can use something like this. We have a support around here, so we can consider using this as our take profit level. So if we had entered a sell around here, we would have caught around 420 pips, right? And that would have given us a good risk to reward ratio, because we would have been setting our stop loss above the resistance, sorry. That would have been 120 pips stop loss, and the take profit about 420 pips, okay? That's even more than ratio 1 to 3. So that is a good catch. This was a good catch. So that is how the M pattern works. But now you can also use other indicators for additional confirmation. Remember that when you are using the M pattern, it is important that you set your support and resistance levels. They are very, very important, okay? And then just to to add to your confirmations, you can decide to use other indicators like the RSI or the stochastics and even the moving averages as well, okay, for extra confirmations. Now you can see that the RSI, about the time that the breakout happened, the RSI was in a bearish direction. It was in a bearish direction, still trending downwards, showing a strong bearish momentum. It kept on trending downwards with a little pullback and trending downwards with a little pullback. So seeing that the bearish momentum is strong on the RSI, it would have been like an additional confirmation. Now let us also try using stochastic for confirmation as well. So we can see that right after the breakout happened, okay, in this case, the stochastic was in the oversold zone. So one thing you should know is that sometimes indicators can give different signals, okay? And that is one of the reasons why it is not good to rely on only one indicator, because we can see that right after this breakout happened, the stochastic oscillators was still in the oversold zone. So you might be thinking that is a buy signal, whereas it was a sell. So now using indicators for extra confirmation, when the indicator is not giving you the confirmation that you want, you can try another indicator. Then once you have multiple indicators not giving you the confirmation, then just stay away from the trade. Okay, stay away. Now we can see that the RSI was giving us the confirmation that the sell momentum was strong, although at this point it entered the oversold. But it kept on trending downwards with just little pullbacks. So that showed that the bearish momentum was strong. But the stochastic was just already in the oversold, and it even started pointing upward at some point. So the stochastic signal was not confirming our bearish move, but the RSI was confirming it. So just to have majority wins the vote, right? Let us try another indicator. Let us try using the crossover strategy on the moving averages. So I'm just going to add both the MA9 and the MA21. Just going to add both of them, MA9 and EMA9 and EMA21, right? So now we can see that the crossover actually happened around here. That was even before the breakout happened. But remember that when your moving averages are getting wide apart, it is a confirmation of strong momentum. So now we got another confirmation from the moving averages because they were going wide apart right after the breakout happened. Had it been that this breakout was not going to be valid, probably we would have seen the moving averages getting close to each other or even tangling, right? You can see how tangling moving averages have, how they usually tangle when the direction of the trend is not clear. The moving averages entangle each other, right? But here they were widening apart, showing that the momentum was strong. So this was a bearish confirmation. So we received the bearish confirmation from the moving averages, we received the bearish confirmation from the RSI, but the stochastics did not confirm our bearish. So we had two confirmations and we were good to go. So we would have entered our sell and taken our profit right at the support level. So that is how the M pattern works. Remember to always use good risk management and always try to make sure that you manage your emotions properly. Do not trade with an amount that you cannot afford to lose. Please always trade with amounts you can afford to lose, because profit is not guaranteed, irrespective of the strategy that you are using. Profit is not guaranteed, okay? But just make sure that you observe the rules for whatever strategy that you are using. Make sure that you observe the rules diligently. If a strategy says that you should wait for so thing to happen, patiently wait for that to happen. Do not try to rush into a trade when the signals have not yet given you the go ahead. Okay, so try to be patient. Trading is a game of patience, right? So the M strategy, the M pattern strategy, is a very effective strategy, but always observe good risk management. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.